All of that, and we are joined by Evan Lucas, IG market strategist from Melbourne. Evan, great to see you there. Yeah, let's firstly focus on that data out of China, the short-term money rates spiking there to around that 4% level. Worries about the bad loans for those major Chinese lenders too. Sense that perhaps the PBOC is going to stamp down again on excess lending. What's your sense of whether we should be worried about a credit squeeze out of China?
Yeah, I think you've got to look at this again from whether it's short-term or long-term views with regards to China. China is very much aware of how their current lending is going and where they're currently sitting. So the news yesterday afternoon, it took about an hour or so before it really filtered through into the market quite heavily. It had been out since around about 2 p.m. Eastern Australian time, and that was that the five biggest banks in China, particularly the Industrial Commercial Bank of China, was taking roughly around about 22.1 billion yuan of bad debts and doubtful debts off their books. They're taking it as a write-off. It's around about 3.65 billion US dollars. So a fair hit, but not a massive hit considering when you compare it to first half profits of something along the lines of around about 76 billion yuan. So big hit, but what the issue comes with that is that again it gets back to what we saw the day before with regards to house prices. House prices in China have risen again to basically almost record highs, up 20% in Shenzhen and also in Guangzhou. We saw Shanghai and also Beijing up around about 16 and 7% respectively as well. So all of that moves to hold to the idea that Shang Feng, who is the current head of the China Banking Regulation Authority over there, has come out and basically said that, look, we are again looking at how the rates are going, whether or not we do actually need to sort of slightly tighten the rates. And the fact that CPI is now heading up into the 3 to 3.5%, that really does affect the currency. It's why you probably saw the yen, the Nikkei, and also the Nikkei moving the way you did. You saw the Japanese yen yesterday basically taking off against all 16 major trading partners, and that pulled the Nikkei lower. Once the Nikkei took off, the ASX followed with it. So all of that's very, very interesting. It's a good long-term thing. We know that the Chinese are really trying to crack down on this whole speculative lending, particularly shadow banking. Shadow banking has been a real issue for them over there. And last night we did see, as you said at the opening, the overnight cash rate and also the 7-day cash rate on Chinese markets jumping up quite hard. The overnight jumped up around about 76 basis points, and that really will create shockwaves. It did put the Asian markets particularly in a bit of a downward trend, and a lot of the trend momentum players, and particularly the clients that we have here, are watching very closely that yesterday we saw a very, very strong, basically bullish reversal in the fact that we made a top higher high and then we finished on the lower lows. So we need to see a confirmation of that today. A lot of people are talking about it in the Aussie dollar, they're talking about it in the ASX. You also saw that in something in the Nikkei as well. So very, very interesting. Are we now turning to a bit of a shift that we have seen a bit of a momentum game changer out of China? And that therefore brings in 2 p.m. this afternoon and also 12:45 here in Australia for the flash PMI data. It'll be very, very interesting to see how that filters through to the market as well. Expectations are for 50.5, so that's a very, very small expansion. Expectations from our side is that we actually may see them contract. Reason for it, we did see the trade balance numbers coming out 2 weekends ago. The export numbers were okay, but they were certainly weaker than expectations were there, and the small and medium enterprise tends to be the place that gets hit the most, and that's what the HSB flash numbers concentrate on rather than the state-run enterprises, which is the official figure. So don't be surprised to see a slight contraction there, and that will probably see the Aussie dollar and the Aussie market going with it.
Yeah, you mentioned that 2 p.m. as well being important for the Aussie too, and markets with that speech from the RBA Deputy Governor Philip Lowe. What are you looking for from his speech?
Yeah, I think the reason we want to watch what Philip Lowe has to say, obviously we saw the CPI data yesterday. It was slightly to the upside. I don't think that's actually a surprise. The fuel prices, utility and property prices certainly have been driving that inflationary factor. And the reason we want to watch it very closely is particularly what came from Glenn Stevens last Friday during his very, very soft speech. But the last comment he said was about the Aussie dollar and the fact that they don't sort of have probably, and in his words, the gifts to maybe alter that. So it'd be very interesting to see if Philip Lowe sort of goes the same line and he goes back to, yes, inflation's now getting into our comfort band of 2 to 3%. We do see green shoots in the economy, and we also see housing as being a slight concern. If all those three come out in his speech today here in Melbourne, it will be very much a sign that the easing cycle is well and truly dead. Analysts are already saying that from yesterday's CPI print anyway. But any confirmation of that may actually have a reverse effect of what we've seen on the Aussie dollar in terms of where it's at. And we do know it's going back. We do know the global trend there. But if we do see his speech suggesting that the easing cycle has certainly been put in the rack and it's not going to be coming out anytime soon, it may actually take the Aussie dollar the other way. Probably mostly priced in, but it may see a little bit of a blip at 2 p.m. this afternoon if he does confirm that idea, and we may actually see the Aussie dollar holding on to around about the 96 handle instead of pushing through it like we look like at the moment.
Yeah, so just on the ASX 200 on the open, what's your opening call?
Yeah, the opening calls are quite interesting at the moment. The opening call actually is calling the ASX dead flat. Now that is quite an interesting thing. I think that's probably coming down to the fact that also this time next week we will be watching NAB. They will be coming out with their full year earnings, and ANZ would have already done it, and then we were also leading into Westpac. All three of those had a fairly big reverse yesterday when that China data came out, and a lot of people alluded to the whole banking idea, and particularly with ANZ and their Asian exposure story and how much they're tied up with that as well. So that may be where the reverse is coming and where we may see support. But having a look at BHP, it does look like it will contract today. It's had a very, very good couple of sessions. It was up roughly around about 5.5% over the last 7. It's up 23.5% since its June 25 low, and it does look like on its ADR that it will probably go backwards today. We did see iron ore off around about 10 US cents to 133.2 US dollars a tonne, so that may also be a bit of a contraction. But all in all, it does look like possibly the finally seeing risk sort of turning off. The bulls have had the market for such a long time that maybe the bears may get a little bit more sort of excitement over the next couple of days as we do see a bit of volatility coming in, and there may be just a bit of an exhaustion in the buying side, Bridie.
But out to the end of the year, you think though we're still going to push higher after this pullback?
Yeah, you certainly would suggest that. I mean, having a look again at Q3 earnings coming out of the US, they're really, really good numbers, and there's no reason why you can't do that. We also saw Alan Greenspan, the former head of the Reserve, coming out last night and saying the momentum is still there, even with any form of pullback that may come over the next couple of weeks. Is expected. I'm not surprised that we're starting to see it. It's probably a little bit earlier than I thought it might come, but we are due for a pullback. But I still think 54.50 or thereabouts. I actually think that the 61.2% retracement of the 2007 high to 2009 low is where we'll finish, and that's 54.26. And I think we'll probably get there by the year end, but we may actually have to wait a little bit longer than probably what was expected with this sort of pullback, particularly in the Asian region now looking like it's probably going to take hold for the next couple of weeks.
All right, Evan, be good to chat to you through the day. It's going to be a busy one. Thank you so much for that.